name's Peter Venn. I am the Managing Director of Wind Lab Africa. I'm here to talk to the USB LeadersAngle, all about renewables. Renewables and renewable energy is the most exciting industry in South Africa at the moment, all around cheap energy and quick to build energy that's going to help this economy grow. Herewith follows a short 15-minute presentation of my speech. I hope to make this a little bit informal. I've got three main sections that I'm going to talk about: the electricity market in South Africa, renewables, and then the finance side of renewables. Renewables, my definition of renewables is really around the feedstock, which is a sustainable feedstock into the electricity generation. So we're looking at wind, solar, both the PV and the concentrated solar, as well as hydro. So the electricity market in South Africa, it's relatively complicated. It's a large mix of different technologies. We do have the majority of coal up in the northeast part of the country. We do have the Coburg power station sitting on the west coast. In between, there's not much. Distributing power from the northeast to the rest of the country, if you're in a city like PE, you're looking at up to about 10% losses, technical losses, in moving that power from the coal facilities to PE. So we start off by only having 90% of power available from what we've actually produced up in the northeast. There's a lot of players, but most of them are government entities. We can look at Eskom, we can look at city power, we can look at the metros in the big cities, and most of these are government entities. And what we have is we have National Treasury at the end, sitting behind the Department of Public Enterprise and Energy, being a player and the referee. Does electricity drive GDP, or does GDP growth drive electricity consumption? I would say it's a combination of the two. If you look at South Korea, they run their utility at a loss. When I last looked, I think it was for last year, the South Korean utility was at about $1 billion loss. They just want to make sure that there's enough power in the system that if you turn on the lights, if you want to build a new aluminium smelter, you can do so. That's not what we have here today. It's impossible to have a 0.01 reserve margin. It's impossible to have. Technically, that's what we have on a couple of days, but actually the reserve margin's in deficit. We are turning off facilities to get to a 0.01 reserve margin. And that is not good for any of the economic activity that should be happening in South Africa. Electricity generation, whether it's conventional, coal, nuclear, or renewables, should be a boost for the economy, should be a boost for the local communities. This facility, Medupi and Kusile, there's been labor disputes at Kusile, and yes, there's been labor disputes already I know of in the Jeffreys Bay area with renewables. This shouldn't be happening. These are large sums of money that are allowing the country to focus on the rural areas of the country. Electricity costs a lot of money. A small wind farm costs about 3 billion rand to build. And yes, they're very capital intensive at the beginning, whether we're talking about base load or renewables, but they do operate for 20, 30, and if you look at some of the American, Australian facilities, we're running 40, 50 years that they've been maintained, looked after, and these facilities are still running. So I just put up these two diagrams. The top one is electricity consumption, and the bottom one is GDP growth. I've lined the years up, and you can see, yes, we had a world crisis here, but you can also see the drop in electricity demand when we're looking at the 2009 numbers. More worrying for me is this drop that we see in electricity demand last year. It was around 2% real drop in electricity demand last year. Eskom, if you go onto their website, weekly delivers a weekly bulletin which talks about load shedding, the adequacy of the system, and the red line is this year's number, the yellow line is last year's number. And again, I want to point out the delta between the two. The red line's below the yellow line, and in a developing country with 40% unemployment and new industry, we should be seeing that red line 2, 3, 4, 5, 6% above the yellow line. Eskom hasn't stopped load shedding. So that's rubbish. Eskom has been load shedding since 2008. What you and I see as load shedding, lights going off, sure, that stopped in 2008. There was a political promise. There's an election next year. It's going to be tight at least at a provincial and a municipal level. But Eskom hasn't stopped load shedding. The scary part of it is Eskom is load shedding industry. They are buying electricity back at double, triple, 4 times the price of what it costs those facilities. Those facilities are making profit by not operating. All right, I'm going to move on to renewables. I wrote a couple of words down about the renewable energy sector. I mean, I'd start off this morning by saying tiring, but exciting, growing, intensive, competitive, challenging. But I think what I'm most excited about being in this industry is it's a new industry. It's growing. You know, it's a lot of people young at heart. I mean, all ages, but a lot of people young at heart that have the passion to create something new for this country. It's such a success story, and I'm going to cover it now as we move forward. But this has to be one of the biggest industrial success stories of my business career, very short business career, but of my business career. The biggest problem that we have is most of these agreements, the way the market works is that you build a facility that, in our case, costs somewhere in the region of 3 to 4 billion rand, and you then get a license to operate for 20, maybe if you're lucky, 25, 30 years. By the time that facility is 5 years old, the technology's changed, the industry's changed, the feedstocks have changed. The biggest thing that's going to impact this country is fracking. Are we going to do it? I don't see how we can't. I'm not advocating for or against. I can't see how we can't do fracking. The United States, over the last 10 years, has gone from a huge energy importer to an energy exporter. It's going to change the geopolitics of the world. So, having said everything that I've said, you won't expect the words that come out from my mouth now, but well done to the South African government. This program is a shining star in what they've done. Over the last 36 months, that's a blink of an eye, 47 billion rands worth of investment into renewable energy. I mean, well done. I mean, that's all I can say. The only problem they're doing is they're doing it too quickly, and who's ever said that about our South African government? This program is the best renewable program in the world. It will take South Africa from zero, nothing. In solar PV, we'll be 10th in the world in 3 years. In wind, we'll be 16th in the world in 3 years. It's unheard of. This is a shining star in the National Development Plan, and really we should understand how we can emulate that and how we can expand upon that. The naysayers say wind and solar, because clouds and nighttime, is variable, but so is demand, and that's all the slide is trying to illustrate, that you've got demand, it's variable, it's predictable, it's quantifiable, but so is wind power. You don't go from now till 3 minutes in the future and have no wind. It degrades over time, and forecasting is an important part of what we do. So you would much rather have many wind facilities that you can forecast than have coal-based or nuclear-based facilities that turn off in 3 minutes because a bolt is dropped. So what we have in the blue is demand. And what we have in the pink is wind energy. This is Finland, if I'm correct. But you can see that's demand, extremely variable. Wind, variable. In very rare instances do you get to no wind, but again, it's predictable. So what they talk about is a capacity credit. And what they talk about is, if you look at those megawatts going into the grid, or megawatt hours going into the grid, because it's so small at the moment, it's not about adding, it's about taking away from the peak demands. And that's what we want. I think there's one thing for business people that I like to say. Warren Buffett has invested $10 billion into wind. But the fact that he's invested $10 billion into wind says something. I mean, he's invested into trains, private jets, Coca-Cola. I think we have a lot of respect for the man. I do. And he's invested $10 billion into wind. These technologies are very well understood. And I think the key thing is that most of the money is up front. Now, that might sound, well, you've got very little variability post year one of operation, post the construction period. So you're looking at 3-4 billion rands worth of capital, and you're looking at no more than 50 million rand to operate that facility. Non-recourse project finance, so it's been a big success in this country. These projects are funded on the whole with about 70% project finance debt. So the banks are putting in, let's just call it about 2 billion rand, a little bit more than 2 billion rand per wind facility. And it's a combination, but I mean, it's the names that you know. The Industrial Development Corporation, the IDC, has been very successful in this area and has invested in a number of projects. And then if we move across to the equity side, there's a number of different equity investors. We've seen a lot of funds come out of the USA. The Harvard Endowment Fund is very well invested in the South African renewable energy sector. There's a number of UK funds that are out here. But the big pension funds, the Old Mutuals, the Stan Libs of the world are well invested into the equity sector. We were very involved with this organization. March the 2nd last year, it didn't exist. Today, it's a 20 billion rand company. It's a joint venture between Exxaro, the coal mining company, which is ranked in the top 10 return to shareholder companies over 5 years globally. So yes, mainly supplying Eskom with coal, and Tata Power from India. But what a success story. What a success story. Last year didn't exist, today a 20 billion rand company. Developing countries should take on renewable energy more and more for 3 key reasons, and those being quick to build. You can build a solar facility in 6 months. Cheap. Wind power today in South Africa is the cheapest form of new electricity, 90 cents a kilowatt hour. You don't get cheaper. And the investment that it brings. So for a developing country, most people think, call a developing country, Botswana, Namibia, Angola. Most people think these are very risky investments. They probably are. But if you go in there with a project like this, you will build the confidence in the investor base. Why do renewables? The number one thing is it shifts the risk from government to the private sector. We're going to, in 3 years' time, have 100 producers of power. 2 or 3 of them will be government, Eskom, City Power. The other 97 will be private that only get paid when they send a kilowatt of power down the line. They're taking all the risk, all the finance risk, all the permitting risk, all the construction risk. Explain to me in there where I mentioned the word subsidy. They're taking all the risk.